Hello everyone. So in this session we will be learning about how to prepare a bank reconciliation statement when we are given balance as per bank statement, normal credit balance, and we have to find balance as per cash book. So let's see this example first. Messrs. Vinay Limited is in the business of manufacturing electrical wires. Balance as per bank statement is 2,30,000 credit on 28 Feb 2019. Prepare bank reconciliation statement and find the balance as per cash book. 1. Check deposited but not cleared amounting to rupees 65,000. Second, direct payment of electricity bills of rupees 10,500 by bank but same is not recorded in the books of accounts. Third, fixed deposit along with the interest of rupees 1,20,000 matured and credited in bank statement but not recorded in the books of accounts. Fourth, dividend receipts of rupees 20,000 credited in bank account but not recorded in the books. Now this is format of bank reconciliation statement as on 20th Feb 2019. Now we will write balance as per bank statement on 20th Feb 2019. Balance as per bank statement 2,30,000. Now let's see all the transactions one by one and we will try to calculate the impact of each transaction mentally, and we will also be preparing working notes for each transaction. First, check deposited but not cleared amounting to rupees 65,000. So there was a check of rupees 65,000 which was deposited but not cleared. So since the check is deposited, it is recorded in our books of accounts. So that has increased the balance in our books of accounts. But the same is not recorded in the bank statement since the check is not cleared. Now here we are given the balance as per bank statement. So we are moving from bank statement to our cash book, or we can say bank account as per books of accounts. So to the extent of 65,000, our bank statement balance is less as compared to cash book. So we have to add. Now let's prepare a working note and understand its impact in detail. Working note number 1. You have cash book, passbook. Let's assume 1 lakh balance, debit balance in cash book, 1 lakh credit balance in passbook. Now the check has been deposited. So on the debit side of cash book, we have 65,000. Since it's not cleared, there is no entry in the passbook. So balance as per cash book, 1,65,000. As per passbook, 1 lakh. Now we are moving from passbook to cash book. So we have to add 65,000 in the bank reconciliation statement. Let's add it. Add a check deposited but not cleared, 65,000. Now the next transaction. 2. Direct payment of electricity bills of rupees 10,500 by bank but same is not recorded in the books of accounts. So there was some direct payment of electricity bills of rupees 10,500 by the bank. So there is a reduction in the bank balance as per bank statement to that extent. But since it's not recorded in the books of account, our bank's balance to that extent is greater than balance as per bank statement. So we have to add 10,500 in our bank reconciliation statement. Now let's prepare a working note and find out this impact. 2. We have cash book, passbook. So 1 lakh debit balance as per cash book, 1 lakh credit balance as per passbook. Now there is a direct payment by the bank. So 10,500 on the debit side of passbook. Same is not entered in our cash book. Now balance as per cash book is 1 lakh. Balance as per passbook is 89,500. Now we have to move from passbook to cash book. So we have to add 10,500 in our bank reconciliation statement. Let's add this. Direct payment by bank not recorded in cash book 10,500. Now let's see the next transaction. 3. Fixed deposit along with the interest of rupees 1,20,000 matured and credited in bank statement but not recorded in the books of accounts. So fixed deposit of 1,20,000 are credited in the bank statement. So our balance as per bank statement has increased to that extent. But same is not recorded in the books of accounts. Now we have to move from bank statement to our cash book. So in order to match our bank statement to cash book, we have to reduce this 1,20,000 in the bank reconciliation statement. Now let's prepare a working note for this. Cash book, passbook. 1 lakh debit balance as per cash book, 1 lakh credit balance as per passbook. Now 1,20,000 fixed deposit matured, credited in our passbook, but there is no entry in the cash book. So balance in the cash book 1 lakh, balance in the passbook is 2,20,000. We are moving from passbook to cash book, so we have to reduce 1,20,000 in bank reconciliation statement. Let's do that. Less FD matured and credited in bank statement but not recorded in cash book 1,20,000. Now the next. Fourth, dividend receipts of rupees 20,000 credited in bank account but not recorded in the books. So we have received a dividend and same are credited in the bank account, that is bank statement, but not recorded in our books of account. So to that extent, our bank statement balance is greater than our cash book. So since we are moving from bank statement to cash book, we have to reduce 20,000 in bank reconciliation statement. Let's prepare a working note for this. For cash book, passbook, 1 lakh debit cash, 1 lakh credit balance as per passbook. Now dividend of 20,000 received and credited in the bank statement. So 20,000 on the credit side of passbook, no entry in the cash book. So balance as per cash book is 1 lakh, balance as per passbook is 1,20,000. Now we are moving from passbook to cash book. So we have to reduce 20,000 in bank reconciliation statement. Let's do that. Less dividend received credited by bank but not recorded in cash book 20,000. Now let's complete this bank reconciliation statement and find out what is the balance as per cash book on 20th Feb 2019. Now the 65,000 plus 10,500, that is 75,500, 1,20,000 plus 20,000. So we have to reduce 1,40,000. So 2,30,000 plus 75,500 minus 1,40,000, that comes to 1,65,500. So this 1,65,500 is balance as per cash book. So this was about how to prepare a bank reconciliation statement when we have normal credit balance as per bank statement and we have to find the balance as per cash book as on that particular date.